So if you take a look at the 4H time frame here on USD Swiss franc, what you'll see is that price has created this trend to the upside for quite some time here. Now, what most traders will be doing is they will be adjusting this trend line to say to themselves, well, the structure of this market is bullish. Now, granted, we have high highs and higher lows where price has been pushing up for a long period of time. But what you'd identify here is a level in the market where price has attempted to break out and failed, closing bearish back below the structure here around 90.04. Now, what does that mean? Well, if you think about this, imagine the amount of stop losses that were placed above this level here for those that were selling this resistance, anticipating price to continue bearish. Also think about the buy stops that were above here when the buyers were planning to enter the market, maybe on the break of, let's say, 90.08. Now, this impulsive move to the upside, more often than not, is a result of news. And here, this move to the downside more often is a result of either manipulation, buyers taking profits, sell stops being taken out. So what does that mean for us here? Well, we understand the behavior, meaning in its simplest form, it's failing to break and close above, closing below, creating a strong key level. How can we take advantage of this behavior? Well, all we have to do now is understand what's happening. We have a level here in the market where price failed to break below around 89.89. Price has now created a new structural low below this level. Is this significant? Well, majorly. What does that mean? Well, as long as price is trading below this level, we can look for sells. How do we do that? Well, we'll look at the behavior of the 4H candle. You can see it's currently bearish with a wick rejection, meaning it attempted to push bullish and failed, and now is turning bearish. We can scale down even to our 1 minute time frame, and we can take advantage of this. Look at the trend. The intraday trend is clearly down. So how would you take this trade? Well, we can simply wait for this candle to close. We're just looking for an identifying mark, a pattern to illustrate that this momentum is going to continue pushing bearish as long as we trade below this key level here, which was at 89.89, and we get a signal to sell this market. That could be a bearish close, that could be a breakout, that could be whatever it is. In this instance, you can see that this candle was flipped from being bearish and now is closed with a strong wick rejection. This shouldn't scare you. What we'll do is we'll enter this on the break of this current low here where prices failed to break before, and we'll make sure we place our stop loss above this structure. In this instance, we'll probably use, well, it's not even going to be a pip stop loss here, but just to be safe rather than sorry, I think we'll go for a 1.5 pip stop loss. Okay. Now, once we go through this trade, the idea is this. Price will come back down to a major level in the market. So this is the higher time frame structural trend line here, or as I like to call it, a brick wall. This is the major high where we anticipate price not to trade above, based on this key level here, 89.89. And the overall sentiment of the market is bearish from a high time frame perspective. The current 4H candle is bearish. It attempted to push bullish and failed. And the structure of this market is also illustrating to us that the trend is down from an intraday perspective. So we'll take this trade, very simple trade. We're not looking to buy for support here. We're not worried about the wick rejections. We're just following behavior. And now we'll let this trade run out for a 1 to 3. We're not going to stretch this to a 1 to 3.5 here. We're going to be reasonable and we're going to go just for a simple 1 to 3. Price can come all the way back down to this level before it finds some sort of support and bounces off of. But we're just going to take a very comfortable 1 to 3 and we'll see how this trade plays out. We'll let it run. So there you have it, guys. We've hit take profit on our trade this morning on USD Swiss franc. Now, as you can see, the components of this trade is what really made it work. It's not just a single pattern that we looked at here. It's the overall process of how this trade can play out. Now, granted, we did see price turn back around and hit that 89 level again. But as you can see, it was respected immediately. And then price continued to push down. Now, let's just go over three important factors here. What made this trade valid? Why did it continue to push down? Most people would have thought this was bullish and it's going to continue up. But the thing is, you have to distinguish the difference between structure and behavior. And in this instance, we're focusing on behavior. Why? Price is failing to break structural highs. We have stop hunts and we have evidence of bulls taking profit or bears stepping into the market once the retail traders are out. Now, I don't need to go into the nitty gritty of that because it's not important. The way I see this is a key level, a breakout, a break back in. I see this as multiple wick rejections indicating that the bulls were failing to break above. And then we have price breaking this 89 level. Once it broke, it never was able to continue pushing above it. Every time it attempted, it failed. Once that happens, we wake up, we trade the London session or pre-London session as it is now, and you look at this and you say to yourself, the current behavior of the market has attempted to push bullish and failed with this wick rejection. We're now rejecting it and the markets are now pushing to the downside. How do you jump in this? Well, you have to scale to your lower timeframes. Once we scale down to the lower timeframes, what do we see here? We see structure and we identify patterns. And what is that? Well, we have a market structure that was pushing bullish, again creating structural highs pre-London. We have the market now taking out consolidations here to the left around 89.91, and we have strong bearish momentum. This 89 level was a very important level for us on the 4H time frame, and this is where prices failed to break above for a very long period of time. You can now look at this as your retest level. You can look at this as a level where price should trade below in theory based on the behavior and structure. Once you identify that, you set your trade, you place your stop loss, and then you target your lows. Remember I said in the beginning, we can target these lows, but we're not going to get greedy. We'll just go for the 1 to 3. And as you can see here, this trade played out pretty well. So just to really summarize this, make sure you're looking at the 4H time frame or just your higher time frames to identify the overall behavior. What is the sentiment of the market telling you? What are the key levels where price should, in theory, respect, like this 89 level? Why should it respect that? Has it respected it before in the past? And then once you have identified that consensus, scale down. 15-minute time frame, 5-minute time frame, 1-minute time frame, whatever it is. Identify the structure, behavior, and add a pattern that works for you and as part of your plan, and then execute the trade. As you can see here, this played out pretty well, and I really hope